Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM links you to the global markets to assess various financial asset classes. Now, before we dive in, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video at your own free time on our YouTube channel at hfm.com. And if this is your first time here, consider to subscribe, like, and click on the notification button so that you're not left out in future content that we produce from time to time. That is going to be of seminal importance to your financial journey, with our goal being filling in the educational gaps in context of the financial markets. Now, with that in mind, starting off from fundamental analysis to look at economic forces, economic stroke geopolitical forces moving the financial markets. Today being on the 21st of February 2025, yesterday we had data from the Australian state. We had Australian economic data from the labor or employment sector of the Australian country, and we see, where do you click to notify? Thanks. Okay, Collins, when you visit YouTube, you could see a notification bell, a bell-like structure. Click there also, so that every time we post, it sends you an alert. Thank you. So we see the Australian labor data is giving us mixed reaction. First, we have unemployment rate in Australia coming at 4.1%. The anticipated or consensus was at 4.1%, but the previous was at 4%. So we see an increase in the number of unemployment increasing by 0.1%. However, on employment change, we see 44,000 jobs print, and we see the consensus being at 20,000. So we see an increase in 24,000, with the previous being revised at 50,000. So we see mixed, both positive and negative. Overall, we know that the Australian dollar has been attempting to recover from the United States, this in analysis of AUD USD, and that's why we have been having an attempt to change the trend from a downtrend to an uptrend. A recovering Australian economy would suggest that we would have a risk-off approach on AUD USD for long positions. Optimistic that this will proceed, but keeping an eye on data from the United States. Today being on the 21st of February 2025, we see that the Reserve Bank of Australia has got a follow-up speech to follow up on the interest rate cut that we saw earlier in the week. We also see a heap of high impact news from Britain, from the Eurozone, with precision in Germany, and Eurozone in general, and later on in the day we have data from United States as we head over into next week. With that in mind, we proceed to the chart. Very nice. On gold, we have been in an upward momentum or trend, if you may like, where the momentum has been moving with almost accurate precision to the upside. We see the overall uptrend attributed by the uncertainties. I'm sure we have repeated this. The uncertainties which are brought about by the trade wars happening between the United States and her neighbors. But let's go to much lower time frame to see what we see, what we could observe. Nice. On the 4 hour, we see that price has been giving us some sense of consolidation, but at the back of our mind, you know that we're in a bullish uptrend. We'd want to see this area of interest being broken, and just yesterday we almost touched the 3,000 mark on gold that we have been highly anticipating. Would want to see price on the 4 hours close above this key level to give us confidence to get in for the long position. However, this could also be seen as a as a retracement to have the market proceed in the overall trend to the upside. This would give investors and traders confidence to consider getting in for long position, of course observing risk management. Another trendy asset would be in indices, where we see in US 100 the earnings report for Q4 in 2025 and the optimism of analysis into 2025. We observe that the index US 100 has been in a consolidation, but we broke above this key level. We see some sense of retest with yesterday's candle printing closing above this key level here that was tested more than thrice. Would want to see the price printing on the upside for continuation of this trend, and this would give us confidence and investors and traders to keep looking for long positions. In technical analysis, we define technical analysis as the study of past historical charts to find repeatable patterns in order to tell possible future market direction. So we see the test of this key level here, here, and here. The break above, the retest would give investors and traders an opportunity to continue getting in long for this particular asset, that is US 100. US 500 or S&P 500, we see still are retesting this level at 6155.90. Would want to see price close above to give us confidence to keep riding for the long position or for the buy position. On oil, we see that oil is trading at $72.19 per barrel, and this key level has been holding for some time. However, it would be our expectation to see it continue moving in the downtrend, and fundamentally speaking, this has been influenced by the United States on oil producing countries. Of course, using one of the major key oil producing countries, which is Saudi Arabia, to reduce the prices of oil as a measure to have the Russian state, which is in conflict with Ukraine, lack resources to proceed with the ongoing war in Eastern Europe. However, in that part of the world, now that we have spoken about it, we see the new administration of Donald Trump considering to have Russia and Ukraine negotiate and have more than 20% of the land that Russia has accumulated in the war in eastern Ukraine to be seceded and become a territory of the Russian state. Also, at the same time, we can observe that the new government in the United States is reluctant to keep supporting the Ukraine government. This, of course, is going to have implication on the financial charts, and we shall be looking forward to the possible speculation to this regard for us to keep on riding on the aforementioned trend that is going to be established therein. With German 40 or the DAX, which before yesterday, it had increased by quite a huge percentage. Let me check. It had increased by 15% in just 50 days in 2025, only in 2025. DAX has increased by 15%. Now we see price retracing to find key levels for us to proceed with the bullish trend that had already been established. However, it is also very nice to find the earning reports of the stocks which have been put in one bucket to find out if they are positive or negative. If they are positive, we shall be updating you, and if they are negative, we shall also be updating you for us to keep riding this bullish trend, or consider getting in for a change of character if the main stocks in this index would indicate the same. Very nice. So, as a disclaimer, this by any chance is not financial advice. It's purely meant for educational purposes. It is therefore very important to find to use risk management, so that you have longevity in the financial markets, to keep learning as you are earning, and to ensure capital preservation. And until tomorrow, the same place, the same time, I look forward to meeting you guys. This is not tomorrow, this will be on Monday. And if this is your first time to interact with the financial markets, consider attempting to register for an account, or get in touch with your mentor who has led you to this chat box of the Daily Morning Market Call, for them to guide you through the process of account registration, which is absolutely free until you are in a position to get in for investments to make future possible profits. Until tomorrow, the same place, the same time, I look forward to seeing you on Monday. God bless and take care.